Let's just talk on those Standard Chartered rights issue numbers. So the company raising 8.3 billion shillings after looking for about 3.2 billion shillings. So another company being oversubscribed there.
Yeah, we kind of anticipated it, just following the trend of the last four banks that have had same kind of returns. Same kind of subscription. The last four banks have had a subscription, all combined over 100%. So we felt that we felt that the same thing was going to happen for Standard Chartered. But just based on a few factors, first of all, it was trading at a steep discount of about 35%. And the fact that its major shareholder, which is Standard Chartered Africa Holdings, had about 73% a stake, and they had say that they were going to take all up its rights. So that only meant that they were going to depend on the market for that 25% for the take up. And just looking at at the 8 days of trading, out of the 22 million shares that the new shares that they were selling, only 100,000 are actually traded in the rights market, and that tells you that a lot of people actually chose to hold on that stock. So we kind of anticipated that the bank was going to be oversubscribed, the rights issue was going to oversubscribe.
So an oversubscribed rights issue of 8.3 billion shillings there. What are they going to use these funds for?
First of all, one of the basic requirements is actually just to raise their capital ratios to the minimum statutory level. Above that, that is required by the central bank, just to have capital ratios of 1 billion Kenyan shillings, and I'm sure that they're going to settle that. Another thing is to fund the expansion. You're looking, most of the banks actually expanding in the region, and I think Standard Chartered is one of the banks that has been behind the pack. So I guess we are likely to see it moving in that direction, in order just to keep up with the competition. And I think the greater chunk of that money is going to be used in just beefing up its loan book, and the rates coming down. I guess there's going to be more loan uptake going forward.
Well, Rufus, so we had sent him out with results. I'm not sure if you got a look at those results. Posting a 1.1% growth in pre-tax profit. What are your thoughts on that, the kind of results that you had expected to come out of Centum?
Well, okay, I haven't had time to look at the specific numbers, but one thing I know about the story is that it's going to take some time before we start seeing double-digit profitability from that particular stock, because most of the projects that they are currently in right now are actually long-term projects. It's into private equity and real estate, and these are projects that really mature in 3 or 4 or 5 years to come. So with 1.1%, I think that's rather modest profitability. But I think going forward, I think that's when we start really getting good dividends from that particular stock. So this is a stock for long-termers actually.
And let's look at some of the gainers and the losers in today's trading session. Well, the market up 0.11%, but we had Everready up 6.25%. But on the other hand, we had Olympic Capital falling back by 6.49%. Was there any major fundamentals moving that stock today?
Well, first of all, talking of Everready, really, it's not really a good story, because up until now we've not seen any significant, shall I say, strategies that the management has issued to say that they're going to kind of revamp the business, because the business has been very slow. The numbers, when you look at the top line, has actually been going down year on year. And I think it's high time that the management really needs to focus on another business segment. And I think when they came out, I think about 12 months ago, and they said they'd like to reshift the business to into real estate, and kind of start buying goods from China and bringing them and reselling them over here. But we've not seen that being followed up. So I guess all that the market is looking at it and saying, well, there's no really follow up. So I think they're getting punished for that. One of the gainers today is actually Scan Group. If you noticed, it's up about 8%, and I think one of the reasons is people are very bullish about that stock, simply because it's still a market dominant player, controlling over 70% of the market share. And if you notice, Kenya is one of the unique markets where agency commissions are actually very high, because there's really little competition. So I guess going forward with a new, with its expansion strategy, I think about a week or two, opened a new office in Nigeria, and I think the market is looking at all these things, and they're getting more and more confident. This means more revenue for the company, and I think that's going to, that's really feeding into the market bullishness on that stock.
Let's just move on to expectations of fuel price increases this month. We had the Energy Regulatory Commission increasing fuel prices last month. Can we perhaps see another fuel price increase coming through? And what kind of impact will that have on the inflation rate going forward?
Yeah, you're right. Last month we saw a revision upwards of the fuel prices. On average, about 6 to 5% on both super diesel and super petrol and diesel. Sorry, with fuel prices internationally going up since the last time they revised the fuel prices until now, they've gone up about half a percentage point. So we think we're likely to see an adjustment upwards of the fuel prices. But we think when you look at overall, when you look at the price index itself, when you look at the component of food, that generally food prices have been coming down. So the net effect, we still think that it's not going to have a major impact on the inflation. So we think inflation is still going to play around 4 and 5% for the next month.